Welcome, everyone. I'm very excited to discuss a topic that none of the people on this panel brought to our attention directly, but it was Rob Reich, professor at Stanford, who, in an address to a bunch of LPs in September, October, that some of you were at, chose that framing as his way into telling the assorted asset managers and asset owners how to categorize and how to slightly reframe, no pun intended, their um, ultimate understanding of what is going on in the AI space. So we decided to pick that up and make that an even larger conversation now with all of you here today. I'm very excited before we're diving straight into what that even all means to have four people here that we know for a fact have been thinking about this for a very long time. Hannah Gilbert from the British Business Bank and Walter Wiegelook from Manulife to represent two different assets owner across our transatlantic alliance, if you want, here in the UK and out of North America, Canada. And then Sophie Walker to represent our core constituents, namely the VC growth equity investors from EQT. And then we have a very strong, long-standing, but I think most recently renewed commitment to bringing real experts into the room. So we thought actually the most important speaker today, to the extent that that is where the expertise comes from an academic perspective, is Bharat Chandar, who's in Eric Brynjolfsson's group at Stanford and was one of the very important participants in a workshop we ran just outside of the doors of Stanford in November and is one of the world-leading experts on doing research on the impact of AI on the labor workforce. So we have a fantastic panel. We have a bunch of questions that we already agreed on, or I proposed, and Sophie said, phenomenally entertaining set of questions for a Thursday afternoon. But this is an invitation that I want to usher right from the get-go. If you have comments, interjections, or questions, dear audience, throughout, please put them in the chat. We decided against running these inside calls as a broadcast, hence us also seeing some of your faces. And that makes it a little bit more directly interactive, which is according to the spirit of our group. This call is recorded, so whatever you say will be in the public domain, including the questions. But very, very welcome, please, for all of you to jump in. Raise your hand or drop the questions in the chat while we are slowly making our way from what even are we talking about to how should we act when it comes to this differentiation. And kicking off with this first point, I'm looking at you, Bharat. Your research has found that jobs where AI use is mainly automotive, so entry-level employment decline, but jobs where AI is augmentative did not. Perhaps talk us through, and in the way of talking us through, also talk a little bit about the difference, automation versus augmentation, because that might not be in everyone's vocabulary right now. Talk us through what you found, talk us through the difference between the two, and talk us through the difference in effect. And then we can jump right into the VC perspective on this with Sophie joining in a second.
Sure. Okay, so let me give a bit of background first about the research that we did. So we wanted to study how jobs that were more and less exposed to AI, how their employment outcomes were changing over time. So are we already starting to see employment impacts in jobs that are more exposed? Or is that something that, is just being speculated about, but there's no actually data to substantiate that? So we collected this data from ADP, which is the largest payroll software provider in the United States, and we looked by age group and by occupation, how is employment changing over time? So overall, we found that jobs that are more exposed to AI, for young workers, we were seeing these declines. Probably not all of that is being driven by AI, but we have some evidence that, we've tested different alternatives, and it seems like this relationship seems to be holding up. Now, one aspect of that analysis that you highlighted is that we also compared jobs where the usage of AI is primarily automated versus jobs where the usage of AI is primarily augmentative. So first, let me give you a conceptual idea of what that means. We typically think of jobs that are being automated by technology as there is some set of tasks that people are doing on the job, and increasingly technology is performing some of those tasks. So some share of the work that I do on a daily basis is now being done by AI instead of by me. In contrast, we often think of augmentation as enabling me to do more things than I was able to do before. So just to give you an example, it could be that maybe today accountants, instead of just using Excel to do accounting work, they can now do more complicated things. For example, using Claude Code, where they can both do the prior work that they were doing with accounting, but they can now also do coding work that previously might not have been accessible to them, and that enables them to do more things than they could have done in the past. So that's just an example, but that would be an example of augmentation where I'm able to do more things in my job than previously. And so we uh, looked at jobs where the usage of AI tends to be more automated versus augmentative. And for that, we relied on these indices that are being put out by Anthropic. So they regularly report this index of how Claude is being used. So basically, they take this large number of conversations that are coming into Claude, and then they ask, is this conversation more automative in nature or more augmentative? And in their definition, automation is I basically am giving a workflow to Claude and it's doing it on my behalf and it requires essentially no input on my end. It's just I'm giving the task, it's giving me the output, and then I use that output. In contrast, augmentation would be something like I'm using it for learning, which enables me to do more things because I have more knowledge than I did before, or I'm using it for feedback. So I create some output and then I'm doing a bit of a back and forth with the LLM in order to make what I produced even better. So the jobs where conversation tends to be more automated in nature include things such as software development, auditing is another example. Whereas the jobs where the usage tends to be more augmentative in nature include things such as healthcare and management. So this is somewhat speculative, but we found that the jobs where it tends to be more automative in nature, we found these employment declines for young workers. Whereas in the jobs where it tends to be more augmentative in nature, we found employment increases actually. So the jobs were most augmentative, they grew faster than the overall growth for young workers. So it is at least suggestive, we want to be tracking this over time and see whether those trends continue. But it's suggestive that there is this dichotomy between automation and augmentation and potential labor market impacts.
Sophie, does this framing make any sense from a VC perspective? Would that potentially even be something that you can take to your investment teams to say, what is it that we are seeing? Could this even be a categorization that you use as a VC? And then we'll jump to the LPs in a second because obviously there's a whole other piece to this as an asset owner thinking long term. Are there particular risks, Sophie, associated with either of the two, especially thinking into a VC time horizon, which is 10 years and not 10 seconds? Has this come up already? Is this something that you work with or something that we should work with more going forward?
And I think that was super insightful from Bharat. Thank you. I definitely think there's an opportunity to start using the guidance that has come out, the workshops that you ran last year, and also has come out of sort of some of those insights to start breaking down the distinction between automation and augmentation considerations. We haven't done it materially before. And I don't think, anybody who claims that they've got this nailed already, frankly, I'm not entirely sure is telling the truth. So, I think it's definitely, and it's a pretty clear recommendation that you've made in the labour scenarios, which I'm sure is going to get touched on at some point, around starting to do this disaggregated thinking. So we'll take that recommendation and start thinking about it for sure. Intuitively, that there's a few other of the risks that I think are already becoming apparent when we're evaluating AI startups, or risks, harms, opportunities as well. Ditto in the private equity world. Not so much necessarily these, and Johannes, I can touch on some more if that's helpful. So, I definitely think I have been making the point. So we ran some responsible AI training for board members in January, covered 60 board members. They're predominantly board members of later stage strategies, but some of them are startups as well. sit on startups as well. And we started to have the conversation about the elephant in the room in terms of labour and the possibility and importance of having a conversation around digital reskilling and the necessity of doing that, not just AI literacy, but digital reskilling. And we had that conversation partly in response to, for example, we have some trade union issues occurring in one of the portfolio companies, not our own, in South Korea, where the unions are just refusing to respond to the level of robotics that are being potentially sort of required. So excuse my slight noise. So I think we're sort of living with potential around how to respond and how we can respond responsibly in terms of digital reskilling. Also, I think starting to ask the questions around ghost labour, so the labour that isn't seen in order to have robotics, in order to have other forms of AI rollout, that some of those questions are starting to come up, still early days. And I definitely think it's very obvious to us as we roll out AI for ourselves in as a business around the importance of kind of worker feedback. Like that is key. So I think, I suppose there's a number of different areas that are becoming increasingly important for us to start evaluating in any investment.
Fantastic, yeah. And we go to the asset owner piece in a second, but just a little bit, teasing a little bit more of the thinking about this out of Bharat. There's an argument that older workers are performing better in AI-exposed roles because AI complements their knowledge. But then we have people like IBM saying they're actually going to start hiring more early-stage people, and we have people like the Scale AI people putting out a report saying that actually AI doesn't replace anything at the moment because automation doesn't work. And the young workforce is still very much needed and more fluent in AI, so can, as AI develops to become more professional and perhaps better at some of these tasks, they are the ones that will help make that work. So how can we make sense of this complex interaction of AI in the labor market? Because there's definitely not we develop more AI, there will be less employment connection at the moment. Who is most likely affected, and how can workers, and then also, and this is where we're going to jump to the asset owners in a second, ultimately people representing workers, either pensions or insurances or governments, how can they think about this? Looking a little bit into the future from what we are already seeing right now in the research that you're doing and in the evidence, how can we think about these complexities, Bharat? Make our life a little bit harder.
Right. So so let me start with the IBM example. I actually think this is a great example of what my boss Eric has called productivity J-curves, which is that in the initial days of a technology, productivity at firms can actually decline. And the reason that's the case is because they have to make a lot of investments in order to make the technology useful. So with past technologies, a lot of those investments were like actually physical. Like I had to install electricity in my plant or something. So it does seem like those literal costs of developing or integrating the technology are probably lower with AI than for previous technologies, but there's still certainly an aspect of experimentation that has to happen, and probably some firms will overshoot. There will have to be some calibration for to what extent AI works within the workforce and how that should change hiring patterns, if at all. And different firms are going to come to different answers to that. I think another example that made a lot of headlines was the case of Klarna, where they decided not to hire customer service anymore, and then later they backtracked a little bit and they rehired some people. Now, for what it's worth, in that case where they rehired people, they didn't, rehire people one for one. Their customer service, the number of customer service agents that they had after was not nearly the same number as they had previously. So, but I do think it's a good example of this potential overshooting and potentially moving back a little bit. So there's certainly some extent of experimentation that needs to happen in order to find the level of AI that works for individual companies. And I think an implication of that as well is we don't necessarily know what the future holds. So it could be that today the young workers who primarily are focusing on implementation, firms anticipate that that's the segment of the workforce that they may not need to hire as much. And perhaps that's explaining some of the trends that we're finding, but it could be, many of these things are moving targets, and among them is the AI capabilities. And it could be in the future that, like you said, young workers may be able to best adapt to some of these things, whereas older workers maybe will have a harder time adapting. That's what we typically found with prior technologies. So there's a lot of questions here about, is AI different than what we saw in the past? And I think there's many ways in which it is different. I think the capabilities growth and the general purpose nature of it is something that is really quite striking. And I think we all recognize that if we use the technology. And so we don't know the future here. I also think, we should be careful about drawing too many conclusions from individual examples, because I think part of what's going on here is that firms are very different. And then it's also the case that they're also doing experimentation, and they are trying to find the right medium, or the right middle ground for what works for them. So that's what I'd say overall.
Great. Hannah and Walt, beaming you in, do you see this augmentation versus automation, especially the automation part? We will displace workers, as some AI companies almost advertise with, as something that is a systemic risk, perhaps comparable to climate, and definitely something that threatens you as asset owners that are thinking, almost by definition, not in quarters, hopefully at least, but in decades, if not beyond that. And if so, how could that, perhaps even already, at least on the thinking level, influence allocations, ideas of due diligencing funds, right, but private equity and other asset classes? Where are you right now? What role does that already play in your thinking as asset owners? Perhaps starting with Hannah, and then over to Walt.
Thank you, Johannes. Thank you, Bharat. I enjoyed your paper very much, and in particular the jumping off points from your comments around the need to disambiguate. This is, and as Sophie noted, there's an awful lot of uncertainty. There's a lot of nuance, and we really need, and I guess it's thinking both on several levels. So it's systemic level, an industry or sector level, a firm level, and then what it means for individuals. And then there's also different time horizons. So to your point, this is a general purpose technology. We've been through general purpose technologies before. What is startling, perhaps, is the speed of adoption and the transition in some areas. So you link to climate transition, and much like that, we need to have a substantive transition around climate, and there are some sectors and some geographies and some cohorts of workers who are going to be displaced. We know from general purpose technologies over time, ultimately there is we've seen prosperity and improvements in standard of living, but the journey along that road can be uncomfortable for different cohorts. And then So what does that mean then, maybe as a kind of asset owner, when we're thinking about short-term, medium and long-term impacts, and how they play out at a macro level and at a kind of micro level? So I think that there are, and not I mean, Jeffrey Hinton and Joshua Bengio have spoken about this, that almost at a geopolitical or national level, there are challenges around concentration of profits and distribution of those profits, and what we may see in terms of a hollowing out of employment, and then with that potentially tax receipts in certain geographies, or indeed and then an increase in welfare. And so there are some really potential kind of macro challenges if you lean into some of those discussions and observations that we made by Bengio, Hinton, and others, and Mustafa Suleiman around this. 80% of the US workforce could see 10% of their tasks affected. So these interlinkages in terms of time and geography are things we need to think about. And if you're a pension provider as well, if workforce declines, then you're receiving fewer receipts into your pension fund. So there's a dynamic there at play. There is but nobody's kind of quite got the answer to that, right now. And so, in terms of our conversations, if you like, with fund managers, as you know, we have the British Business Bank has a very domestic focus and a particular focus on a VC asset class, and there is and so that obviously kind of moderates and mediates, I suppose, the interactions that we will have. Many of these companies and that are starting up are going to be AI and digital native companies. And so perhaps there are other risks and considerations, some of which Sophie alluded to, that we'd be thinking about in terms of our engagement in terms of those portfolio companies. It's not that they have huge employee bases that are going to be displaced. So that question around at an industry level or a firm level is probably more prescient in a PE or public equity sort of engagement for LPs would be one thing. I suppose what we're seeing here is, and perhaps I'm thinking about actually the talent and recruitment and talent development within some of the fund managers themselves. So one of the questions where we're seeing this diamond of firm composition with maybe a sort of concentration on more senior people at the obviously is now at the top of the pyramid, but you're maintaining maybe later stage or experienced hires, but a narrowing at the base, is what does this mean for firms of all sizes and stages in terms of their talent and leadership development, and some of those learning and almost in an artisanal way sometimes the trade and the craft, and I think the conversations as an LP today I'd be comfortable talking to VC firms about is, well, how are you utilizing AI in your own operations? How is it supporting your talent and leadership development? So that's a very obvious point to start with. But I'll stop there and hand over to Walter, because otherwise I'll have the talking stick for too long.
Thank you, Hannah. I know what you mean. I think there's a danger handing it to me, because I can also keep going on about this, as some of you may know. So maybe I'll start off by talking about kind of broader macro high level, and then I'll go into specifically at the GP level, at the allocation level. I think there's a couple of things that my colleagues have talked about already that I think are happening broadly. One of which is this noise that's in the market right now. I think there's a big polarization, I think, happening because of the uncertainty, where on the one hand, there's this extreme optimism that technology is going to fix everything. Not to worry, it's all going to get fixed. We have the technology. On the other hand, I think there's this dystopian fear that's prevailing in the headlines that, the sky is falling, Chicken Little sort of approach. And I don't think neither one of those is a healthy way to think about this situation, because the truth is probably somewhere in between, as was referenced earlier. I think the other piece of this, and I talked about this at one of our workshops, I know not all of you attended that, but back in Palo Alto in Q4 of last year, which the game theory problem, when we think about automation versus augmentation, when I'm let's say, for example, in my corporation, I am thinking about, do I replace workers and cut cost out of the structure through automation, or do I do something different? Me cutting costs, there's a much clearer line to my bottom line and profit maximization right now. So the reward is much more close to me, and I'm not going to hold back if my competitors are going to do the same thing. So everyone sort of capitulates and goes to automation because it could potentially hit the bottom line faster, and you want to continue driving those profits and revenues and cash flows. And so I think that's going to persist. That's just a natural phenomenon that's going to happen in the market. But I think what that opens up is that because we have this fear, we have this noise, and we have this game theory piece to it, I think what we need thoughtful regulation on some of the issues that touch society. And I'm not typically one to wave the regulatory flag, because I think we've had a lot of regulation in a lot of markets. But I think where there are impacts on broader society and different groups within society, I think government has a role to play with stakeholders to think about, how does all of this play out in the long term, in the medium term, and what impacts is that going to have on our society and our economy? I think one example we touched on before is the disproportionate impact of automation or some of this technology on different age groups. And I know we discussed this earlier and in other forums, but I mean, thinking about, and even examples we've seen in conversations we're having with our GPs and internally, a lot of firms are deciding to not hire or put a pause on hiring junior entry-level talent and making more to do with what they have and the talent they have right now, either reskilling. And I think if that happens structurally across the entire economy in a lot of ways, that you're going to have a whole cohort of young people, especially those got entering the job force, they're not, because that's where the training happened. That's really the apprenticeships that we're talking about, whether it's in gold collar, blue collar, in other industries. So I think we need to think about the magnitude of that risk and what that carries for broader society and economy. But I think that's a regulatory question. I think the other part of this is that because of the fear and uncertainty, I think we need to have a lot more multi-stakeholder dialogue. And I've said this in other forums as well. We need to get investors, we need to get corporations, we need to get civil society into small groups, into rooms to talk about the issues, to think about these issues, to bring awareness to these issues as a part of this process. Maybe not the solution, but I think that's a really important step. And that's easy for us not to do given the impacts of COVID in terms of how we've all been connecting, but also the impacts of technology. We connect more now virtually. We don't get together in person as often as we did. So that's sort of at the high level. And then I think bringing it down to the portfolio level, nobody knows the answer. I think my colleagues on the discussion, nobody really knows what's going to happen. And I think what's important for us as investors is to study and understand the risks and the issues as best we can, recognizing that they're still evolving. And the way that we've been doing this is that we've designed a systemic engagement program where we've been interviewing our GPs globally over the last year or so to understand how they are thinking about technology in their own value creation and their own organization and portfolio companies. And what's important about that is to think about it through the lens, in our view at least, of, and I think TCFD gave us a really nice set of constructs, like how are they thinking about the governance and management of these issues? How are they thinking about this from a longer term, medium term strategy perspective? How are they thinking about this from a risk management perspective? And then how are they measuring to make sure it's effective? What metrics are they looking at? What's evolving? Are they qualitative and quantitative? So we've been sort of working across 46 GPs over the last year. And but ultimately, I think from a capital allocator perspective, what we want to know are a couple of things in a very basic way. How will this technology impact on my existing investments? And are my existing management teams and GPs prepared and thoughtful to navigate this transition and impacts? Two, are there new opportunities that are emerging? And are there business models that are going to become obsolete? And I think that's going to be, it's all going to come down to your fundamental analysis, your investment process, and how thoughtful of an investor you are.
And is that a question, Sophie, that helps you perhaps exactly this last one to think about, sure, I can make some short-term money with some of this stuff, especially the more trendy automation-focused ones in certain industries, right? And that also brings Sophia's questions from the chat here into the fold. How do you price in these risks that we just talked about, that the LPs are starting to think more about and eventually will ask, or are already, some of them, like Walt and Hannah, are already asking questions about, and potentially give you even more guidance through stewardship and engagement going forward on? Are there certain industries where, from your perspective as an investor, that's already more important than others? Are you thinking about regulation, right? Both Walt and Hannah spoke about there are certain very top level big questions that the regulators are looking at right now. We have no clue what exactly is going to come beyond things like transparency and trust creation through things like the EU/AI Act. Where does that all land for you on a concrete day-to-day as an investor, Sophie?
So I think maybe there's a lot of questions in that, but maybe let me start. Okay, so regulation. And the reflections that we'll have there. I mean, we can see some of the lasso effect, I think, still playing out in terms of Online Safety Act when you look at the UK, social media bans, response to the deepfakes, sort of grok and implications, and, pretty rapid regulatory kind of pushback that's happened as a consequence of implication, Indonesia and Malaysia as well, as a consequence of harms becoming suddenly very visible. So I think for me, outside of the kind of big multi-purpose AI Act, so whether that's in the EU or actually some of the more progressive thinking that's coming out of Singapore and China, arguably, progressive in terms of, there is a Singapore agentic AI framework, for example, just released. There is, good Chinese thinking around robotics as well. So, we have some forward planning going on in some parts of the world, but I think what you've seen really play out recently is the kind of lasso of harms becoming very visible. So I think you'd be stupid not to price that in from a labour conditions and labour market risk perspective right now, whether you're an LP or a GP. And I do think there's some lessons learned just from how we've underwritten before. Like, we do have conversations in an investment committee context around, look, this is a potential turnaround case. There might be some redundancies. Will that work for the location? Would it work for the customers and the business model? And is it actually going to create too much societal friction that it's to be actually successful investment or not? So we don't necessarily want to go there as a consequence. Or maybe we do, but we look at it a bit differently. So I just think there's some kind of fairly practical, honestly, lessons learned from the way that we've thought already about workforce transformation. It's just this is potentially at a faster pace of scale and speed. But if there's too much scale and speed, at least I think in a European context, and probably quite a lot of Asia, then there will be very fast regulatory response within my perspective. And I mean, it's instructive to me that we have, to pick a UK example, the first March Against the Machines in London this weekend. That is, that's a societal response in response to fear. And I think it's one of a number that potentially could emerge. So I think maybe that's one reflection. And then maybe just another thing around sort of pricing and underwriting and how to think this through. I definitely think there's also a point, and maybe it's under the bonnet of this sort of automation versus augmentation, but there's something about job quality as well. So I don't enjoy training a machine. I enjoy training a human being. I get pleasure out of, and I've been thinking about that as I've been doing more tasks relying on AI and what is the experience for me as a human being. And obviously there's a lot of negative consequences that can flow from deep automation in terms of human to machine interaction. And my creativity goes down if I'm training a machine versus training a human being. And that might be something to do with my particular brain, but I think it's a broad human impulse. And I think that also plays out in this sort of definition around automation, augmentation. And I don't think we would yet know how to price that at all, but I'm just saying that it's going to be important.
Hannes, can I jump in?
Absolutely.
I love what Sophie just talked about in her experience with technology. And because I think there's clearly a bigger trend, I think, that's starting. And I think there's, from what I've heard, at least in my experiences, is people reflecting more around what is the purpose and the value of the technology in their life. And I think what one area that this sort of comes up, there was in Wired magazine in December, there was a launch of something called the Resident Computing Manifesto. It was designed more of people building technology, but it was really philosopher builder sort of approach. And the question that they posed was like, an analogy towards architecture and building buildings. So we build buildings because they have a function. But we don't necessarily need to make them aesthetically pleasing or nice, but we do, and we have, and that's important to us. It's important to us because how we interact with those buildings in our communities and our lives also shapes how we think about ourselves and our human experience. And so in a similar way, this particular manifesto, and it's gotten a lot of traction, asks the same question about building technology. Are we interacting with technology and is it leaving us fulfilled? Or is it leaving us empty? And it begs the question, why do we have it? And I think the other couple pieces I want to add that kind of builds on this is I've recently came across this quote that I've been using a bit more than I should from Henry Ford. And it talks about our inability to see into the future and incremental thinking, where Henry Ford asked customers, what do you want? And they all said faster horses. Yeah. And so their inability to imagine what this technology can be is a real risk to all of us. And I think we can only see so far. And then lastly, before I see, Hannah, you've got your hand up. Let me just finally say that, and I think we've touched on this last thing that I've said in different ways, but to underscore, I think when any new technology that advances, it removes the mundane, the repetitive, the pattern-based, sort of the low-hanging parts of our process. But what that does also, it makes the remaining pieces that much more valuable. And I think what is going to happen now is there's going to be a lot of mispricing, because I think a lot of this noise, a lot of this fear, uncertainty will cause things to be priced less than it should or more than it should, depending on the hype, depending on the fear. But ultimately, the ability of the whether it's the GP or the management team or whoever to really identify the value of their service and their product to the human being, to society, will ultimately drive the long-term value. So if they're able to do that really well and build something that delivers that, I think that's never going to go out of fashion.
Hannah, do come in.
And yeah, some builds on both those comments. The first is that absolutely to Sophie's point about the role of work in our lives as sort of social glue, social capital, and as individuals is absolutely something to be explored in terms of social cohesion, people's sense of meaning as well. But to perhaps make it a little more tangible and less philosophical, there was an article I was reading in Harvard Business Review more recently about the extent where some workers are using AI more, but actually it's leading to more burnout and more fatigue because it's making them feel like they have to do more faster and be more productive. So there is that sort of way of working with the technology that we haven't solved yet. And then the other sort of observation is we collectively have begun conversations about job quality and the nature of work in relation to sort of 0 hours contracts and kind of the precarious nature of employment and what's that has meant for certain parts of of our economy. And those challenges are somehow still not resolved. But I think we probably need to lean into some of those questions again. And as an institution, we are tasked with and think about, the quantum of jobs and GVA, and we as a public LP, a public finance institution, absolutely need to get to the sort of second, if not now third generation of that around job quality and perhaps a sort of second order GVA impacts. But I'm going to stop here because I can see Bharat's got his.
Yeah, come in.
Yes, just building on this conversation a little bit. I mean, I think it's worth thinking about if we do experience very powerful AI, which arguably we're starting to see in some cases already. I think the question is, what is the comparative advantage of humans relative to that AI? And I think if it gets to the point where the AI is really, really, really good at the execution, like what are the humans still doing in the loop there? And the things that come to mind for me are some of these questions around, like, if we can get perfect answers to the questions, then there's a greater premium on like asking the right questions to get the answers to. And that requires things like taste, intuition, experience, things like that. The other thing that comes to mind is some of the social interactions, and we get a lot of value from being around other humans and talking to them and getting information in that way. So those two things both seem like pretty important characteristics that will remain human, at least for some time. And then I guess the other thing I'll add is kind of this ties into the asking the right questions, but also the normative questions that we grapple with. So whether that comes from the political lens or just some of the questions that you all are discussing on this chat about, like, what is the society that we want? Maybe we spend more time being philosophers and less time executing, the basic tasks that we have to do.
I'll push us into one particular stream for the next handful of minutes, especially from an investor perspective, and listening to Walt and Hannah as kind of two important LPs in across the ecosystems. What am I supposed to do? Do you want me to make money short term by investing in whatever screams AI? Or do you want me to be incredibly careful and think about all the potential, both regulatory and real world risks that could kill a company within my investment horizon? But that also means I'm going to miss out on the stuff, some of which will very likely make some people an enormous amount of money. So where do we land with short-term maximization of returns? Again, I think the the kind of bubble that we're in doesn't perhaps consider enough, and I know some of you do, that the overall world movement doesn't think about most of this. The overall world movement is the only thing that matters is building super intelligence. Some people call it other things, AGI, the exponential. And that means a variety of different things. We can't stop. We can't regulate. We need to build data centers as fast as possible. Nothing else matters. Right? How do we square the dangers, the risks, the issues that we've just discussed that the quote unquote Europeans are so famous for, including on displacement of labor, which is obviously the biggest topic here today, with making money, which is ultimately all of your job. But then I'm zooming in, Hannah and Walt, to start with, to give Sophie a breathing moment to then catch up from that.
I'll make a couple of observations and then I can hand over. So I think in the first instance, again, with our relatively narrow asset class lens, right, around VC companies starting up, rather than those having large existing workforces, it is to what extent actually some of these tools can lower the cost of entry for startups and businesses getting off the ground. So I think that's one opportunity. Two, in some other areas, the extent to which it can speed up, in life sciences and healthcare, when utilized in a kind of responsible way, can absolutely speed up discovery and sort of higher value tasks. So it could accelerate actually for some of our life sciences portfolio their speed to deployment. I think that some of the bigger questions, Johannes, that you're pushing at there are actually then sort of there is the how. So those implicit in that is that the technology is being deployed and utilized in a responsible way. And that is something where, as an LP, we can really challenge our GPs to probe, and actually regulation plays a really important part of that. And are they taking a forward-looking and responsible approach to regulation? How, if we think in creative industries, are the inputs into these models, is the intellectual property being properly rewarded? Because again, there are deep sectoral challenges with some startups and businesses in the creative industries. So the underlying data. So there are questions around the responsible utilization of AI in our portfolio, and what that may mean for other businesses in that sector. Then I think you've really pushed on in your third sort of sub-question, Johannes, around what about these excess profits? Well, that's the ultimate question, isn't it, really, is around the ownership and governance of the winners, whether that's in a kind of AI vertical or within the kind of the sort of transversal sort of horizontal nature of the economies, and how are those excess or concentrated profits, to what extent are those profits going to be concentrated because of really extreme exponential network effects? And if they are concentrated, to what extent are they then redistributed? Now, the narrative around a winner takes all approach in AI that is being pushed and prevalent in some quarters, to what extent, and driving really substantive investments and super high valuations up until perhaps a few months ago. We don't know if that's going to be the way it goes forward, or whether we will have smaller, more niche, smaller language models deployed at a, if you like, at a more distributed scale, and that would allow for if you like, a more distributed architecture and less perhaps concentration of profits. But the sort of Bengio's characterization of these two geopolitical kind of centers, with Europe being squeezed in the middle, is definitely a far from benign scenario. So, but those questions around concentration of profit pools and distribution of profit pools between owners and workers are age-old considerations that we have seen, through a variety of different sort of economic transitions. So yeah, they're not new questions. Maybe because it's sort of so supercharged this time, we'll have to really grapple with them and think about them in a different way.
Well, feel free to come in.
Yeah, really, really interesting reflections there. Well, actually, one of the first things I wanted to pick up on, there's a good piece I read from EQT, kind of framing up sort of the comments around a lower barrier to entry for startups in a lot of areas where we've seen more difficult entry points. But on the flip side, there's also potential for incumbents to deepen their moats with technology if they're able to deploy it effectively and quickly within their business. So it's actually an interesting dichotomy playing out as well. I think from talking about your risk and return, like we want to make money, but you want to think about risks. I think the answer is we want both. We always want both. And I think that there's where the answer lies, where I think what we want our GPs and our investment partners to resist is this fear of missing out. I don't want someone allocating our money to wake up in the morning, read a headline, and be fearful, like, oh, I don't want to get left behind, or I want to have the glamour of being first in something that'll change the world. That's a very different risk profile. At what cost? And we've seen historically, I'm not going to name names, there have been groups of people who have jumped on board on different types of cryptocurrency trading platforms, other things in the past where, and then there's this point, this time it's different. And that is my favorite statement in investing. And although the circumstances, the technology, the geopolitics, what's happening in the world is different, we don't really change. And I think this is a human question as much as it is a technological question. And I'm sorry, I keep going on the philosophical, but I think this is a time of great change, requires a time of great reflection. And I'm going to go back to the text that I referenced, which may not seem relevant. In 1841, Charles Mackay wrote a book called Extraordinary Popular Delusions and the Madness of Crowds, which I reference often. And I prepared some remarks. I hope this would come up. And essentially what I put together is like, humans, they're unchanged across centuries. We're vulnerable to the same cognitive biases, social contagions. But I think what's different, slightly different this time, is it's hyper-connected. It's faster dynamics now. It's a bit more extreme. But fundamentally, it follows the same arc. There's a psychology behind how the mass of individuals move and behave. And I think we're seeing that play out now. So what we want our investors and our capital allocators to do is to resist, have the temperament, have the intelligence to study, wait, be patient at times, allocate where appropriate, and resist just making bets and gambling with our money for fear of missing out.
Sophie, is that landing on your desk from all of your LPs? Did they say to you, really, we want you to be disciplined for bonds? Don't worry about the hypes around here. Or do you actually feel this dichotomy of, look, on the one hand, we're supposed to make money. On the other hand, we're supposed to be incredibly responsible and careful. Where do you land in this at the moment from an investor perspective as a firm?
So I wouldn't say that we feel a tension across our LP base. I mean, as a general rule, I'm being consistently and increasingly asked around responsible AI. I had 3 conversations around it this week, which is good signaling, starting to come from LPs. Well done, LP community, for moving forward. That is quite significant from 12 months ago. So I think there is a curiosity, definitely, and a desire to ask really tough questions, but to ask thoughtful questions coming from the LP community, which is really helpful. Say that again, it's really helpful. Keep it coming. I think that the message I communicated to the board members I trained in January of 60 of them, is we were really intentional about this message. We need you to move fast and responsibly. We need you to move fast and responsibly. Really intentionally, I am trying to thread the needle on behalf of my organization to arrive in that sweet spot. And that's very clear direction from my CEO to me. I don't want this to be slowed down, but it needs to be fast and responsible. And so I'm not saying that we've necessarily always got it perfect, but we're certainly sort of leaning into that direction now, thoughtfully and intentionally around, okay, well, what does this mean in the individual investment cases, and what does this mean in the businesses that we're transforming, and what also does it mean in the startups that we've invested in or we plan to invest in as well. So I don't necessarily, it hasn't always felt easy to try and thread that needle, and I don't think it, and anybody who says it is lying, frankly, but it is possible. And I think that's the sort of art of doing this well, and the art of GPs that have a good understanding of risk and reward, that have a good ability to internalize risk and reward.
I'm just repeating again what Sophie said. Please, LPs, ask more questions about this. And this is not the first GP who says publicly that LPs, even just putting something on the table, is incredibly helpful for something to actually get considered and then eventually get done.
Johannes, can I just very quickly, because I think I wanted to just highlight what you underscore what you said. So in the conversations we've been having with the GPs, I talked about 46 of them. We do ask, what are you hearing from the other LPs? And you'll be surprised to hear very little. And so, yeah, it is getting better. But to my surprise, even like a month ago, I was talking to a large GP and they're like, you're actually the only LP who's ever asked us anything about this. And so I just want to underscore Johannes's point. You don't need to have the answers. You don't have to push a specific best practice. Just bringing awareness and having a conversation with your GPs, I think, goes a long way to build trust, but also progress the conversation.
I'm going to comment further on this device that I think VCs like to deploy. But I do want all of us to have another chance, all of you actually, to have another chance to finish this conversation today. And perhaps looking at Bharat first. So what are we going to do? And again, I give the academic free rein. Who do you think has power in this room? LPs, asset owners, asset managers, GPs allocating money directly into companies, most importantly, startups. And give us a suggestion or two in 60 seconds, perhaps 75, as to what that power should be used for. And then Hannah, Walt, Sophie, each of you to give us an idea of a step that you think you are going to make in the next 3 to 6 months when it comes to using as much influence and power you have specifically to think through this automation, augmentation. How do we square what Sophie's just described as move fast but responsibly? But Bharat, to kick us off.
Sure. I think maybe something to keep in mind is to just think in a way that's forward-looking. So what are the jobs of the future? And how do you empower them? So what are the tools that we need to build to enable those jobs to do more? And I'll just give a quick example before handing it off. So Molly Kinder from Brookings always gives a suggestion about home health aides. So at least in the United States, there are many, many home health aides who are not very well paid. And you can imagine a world in which this becomes an increasingly important job, and we should think about ways to make it a better job. And one way you could do that is you enable them to use AI to accomplish much more tasks, that is, augment them to do way more things that they can do today. So they don't have as much medical training as registered nurses or certainly doctors, but you could imagine that AI tools could enable them to do much more medically than they are capable of today. And perhaps that would even lead to wage growth and make it a better job than what it is today. So that's just one example I wanted to throw out there as something to think about.
Hannah, Walt, Sophie.
Sorry, I was not very fast getting off the mute there. So I think what are we doing? One is really where we can lean into the LP forums. Because it's really helpful both internally when talking about our front office teams and also enabling front office teams to have conversations with GPs where we know that other LPs are indeed starting to ask similar questions or be concerned about that. Then the other one is actually encouraging again, working with colleagues in the front office to improve our own question set in an open and inquiring way, where they're seeing either fund strategies or indeed on the direct side probe around the sort of business case and how it's being built around AI, automation, augmentation, both from a risk perspective in terms of the investment. Have they got the sort of risk side of AI deployment covered, and also the extent to which it's built into the proposition, and making sure, if you like, that calibration between the human and the technology is balanced. And there are certain sectors where that's particularly critical: education, mental health, health interventions, and so on and so forth. So and helpfully on the call here, you've already shared some examples where that hasn't gone so well. So there are points where the interaction with the end customer, that human in the loop, is really important from a propositional perspective in terms of trust, and where in the proposition it's really important from to be there as part of a kind of de-risking element as well.
I have 3 points: awareness, training, and the last one is now escaping me. And design. So I think awareness, touching on what Hannah said, raising more awareness within the LP community. I think the PRI just launched their own forum to go more formally to do that. But we also have a responsibility as LPs to bring awareness and share our insights with our GPs. So doing more of that in the coming 6 to 12 months. The second is the training, which is, I think, that's always important, but especially now. So we touched on reskilling, making sure that we're empowering people to incorporate these technologies in their jobs, not doing it separate from them, and then because that's an easier way to lead to replacement and automation. So a more human-centric approach. And then design. I think the last comment was from I think Johannes, you said go fast, but responsibly. I mean, that's a design question. Ferrari, Porsche, you can go fast and responsibly. They have seatbelts, and I think you just need to, as you're implementing and innovating these technologies, think about the seatbelts. What are the seatbelts you need? It shouldn't slow you down. Just be thoughtful.
Maybe just for me, in the interest of time also, I'm going to say one thing, which is I'm going to read the brilliant AI labour scenario, which has been published, I believe, today, Reframe team. I'm going to socialise it internally, and I'm going to start thinking about some of those recommendations. So that is my key takeaway.
And as a matter of fact, talking about Walt's point about training, we are doing the very first training based on, to an extent, the last 3 years of research we've been doing, tomorrow in Sophie's office at EQT with 18 people, including 3 people from the British Business Bank. And exactly 2 VC investors, interestingly enough. That's a whole other conversation. So ask us next time who's going to, particularly right now, interested in training. Thank you very much, Hannah, Sophie, Bharat, and Walt, for this conversation. It's recorded. The scenarios Sophie mentioned, which we just published today, I put the links into the chat. Do click on them. They are something that we'll return to and launch properly into the community. There are things to think with that we've been working quite hard about on, including with people like Bharat and Walt, who were both at the workshop for the labor scenario. This conversation will continue in a variety of different formats, including in the working group next week. Thank you very much, everyone, for being here, listening, asking questions, and contributing. And thank you for pushing forward to move fast, but not break things. Thanks very much. And see you all soon.
Thank you.
Thanks, everyone.